On behalf of the Institute of Chartered Accountants of India, the Corporate Laws and the Corporate Governance Committee, I take great pleasure in extending a very, very warm and a very hearty welcome to all of you to this webinar on forensic audits as a tool of corporate governance. I have a great pleasure in introducing C. Ajay Upadhyay, who's going to be the speaker of this session and an expert forensic auditor himself. Have had the opportunity of very limited interactions with Ajay, and needless to state, I have been super impressed. So I think today there's a very decisive and a dramatic transformation in the corporate governance landscape. And there has been a huge transformation in terms of an auditor's perception or the perceptions of the auditing profession. And what I'd like to call is the expectation gap. And this expectation gap is what the auditor is supposed to do versus what he's actually perceived to be doing. And one key element of this expectation gap has always been this issue of frauds. So if I were to place these comments on one side, on the other side, I think if there's one thing that the insolvency code has brought to very significant focus in this country, it's the amount of promoter malfeasance and frauds that have happened in the entire business life cycle of a company. And IBC brought with it an attendant set of
Recording in progress.
Professional opportunity for the future. And so we're going to talk about the role of forensic reviews in corporate governance and how it actually turns out to be a potential professional opportunity for us practicing professionals as well. About Mr. Ajay. Ajay is a chartered accountant with over 18 years of professional experience in forensic investigations, financial crime, antitrust investigations, regulatory investigations, dispute services, risk advisory services, and internal audits across various domains. He's been involved in not less than 400 investigations in his career, and he's led several cases in the entire spectrum of forensic reviews, and which is why I thought it's very important, and this would easily qualify to be our curtain raiser session, Ajay. We've not had too many sessions on forensic in the past, so it'll be very nice for somebody like you to be introducing this topic, and we could in fact run it as a series. Ajay is presently a partner with KPMG, focusing on financial crime and regulatory investigations. He's led several arbitration and litigation matters. And prior to his present stint, he was also associated with a leading Indian law firm where he helped actually set up the forensic unit. He was the head of investigations and handled more than 100 matters. He's also assisted several private equity companies in India in their own forensic review processes, led multiple investigations, as I had said before, for companies across all domains, manufacturing, services, etc. So it's now over to Ajay, whom I also believe is a very, very consummate and a very articulate speaker. Over to Ajay.
Thank you so much for the kind introduction.
And Ajay, we have about 1,500 people already logged into this session, so the numbers would only be increasing now.
Okay. Thank you so much for the kind introduction, ma'am. And it's always a pleasure to connect with you. Good afternoon, everyone. My name is Ajay Upadhyay, and please allow me to just share my screen and then I can get started. I am assuming my screen is visible. Can I get a confirmation, please?
Yes, sir.
Great. Thank you so much. So good afternoon, everyone. As ma'am said, we are today talking about one of the most relevant topics in today's situation, especially for people like you and me who are chartered accountants who are into the practice. and we have been bombarded by the situation of so-called fraud in our day-to-day life, day-to-day practice, day-to-day clients. So today we are going to talk on how do we see forensic audits, and how do we strengthen our corporate governance, because both are interlocked and interlinked to each other. So it's important for CAs like us to understand the basic concepts of fraud, how it impacts from the corporate governance perspective, what is forensic audit, what is the role of chartered accountants like us. That's
Sir, if you can be a bit louder.
I will.
Yeah.
Is it better now?
Yes, sir.
Okay. So as I said, I am going to cover primarily on fraud as a concept and how do we look at it from forensic audit and corporate governance perspective. That's the agenda for today. So quickly, the contents we are going to talk about: introduction to the concept, then what is the overview of corporate governance only from the limited purpose of forensic audit, then what is the integration between forensic audit and corporate governance, how do we link both of them together. Important other element is managing the fraud risk, that is our main role. Then technology, we cannot forget technology, because today technology is very well connected to every element of fraud investigation. And then maybe a couple of case studies, and then after that we'll leave for Q&A. I believe this is more an interactive one at the Q&A stage, because I am sure there'll be a lot of questions. So let me start with the introduction. Why are we talking about fraud? Let's understand that. So if you open up any of the newspapers in last 5 years, you will always see on front page big headlines where people are talking about multi-million dollar, multi-billion dollar corporate frauds. For example, BPSL corporate fraud, NSC scam. Recently, we have heard about ABG shipyard scam. Then we had the infamous ILFS scam. Then we had the Yes Bank. So you can name the sector, you will find one large company which has been connected to corporate frauds. What has happened typically? There are two things which have happened in these cases. One, someone has fabricated the books of accounts and the financial statements to show a rosy picture. Number two, another important thing which has happened, which is real money. Promoters have stolen money which they have taken from banks. So what they have done? Taken crores and crores of money from bank, siphoned the money into various companies or for personal utilization, and then defrauded the bank, and in the end they have declared themselves insolvent. So technically these are the two broad things which have happened in our country. That is why we have been kind of bombarded. When I say we, I say the chartered accountants, because somewhere or other there have been questions raised on people like me and you, that what were the chartered accountants doing? How could this not come out? Obviously, the roles and responsibilities of a chartered accountant is slightly different. It is easy for anyone to blame a CA, because the role of an auditor is slightly different than a role of a forensic investigator. Somewhere people have been mixing the role of an auditor with an investigator. Both are different concepts, different skill sets, and different approaches. But leaving that as a point, what I am trying to say is that we don't have an escape from this problem. There will be frauds, which will be coming out. That's why we need to be much more focused and solution oriented, so that we can target the problem at its root stage. Not in India. This is a global study done by an ACFE. ACFE is like an organization of Association of Certified Fraud Examiners. It's a global organization which gives a certification of a fraud investigator. It's a well-known organization with more than 100,000 certified investigators. What it did a survey. It did a survey with all organizations across the globe. What did it found? The results are striking. If you look at the left-hand top side, it says that 5% of the revenue is impacted or lost because of fraud. Now stay on that particular segment. We are talking about every company's 5% of revenue getting impacted only because of fraud. And just multiplied with number of companies and the revenue. It is phenomenal. The fraud amount is phenomenal. So there is no escape to fraud. In fact, it all started in India way back in the Satyam case in 2008, when the Satyam scandal broke, and suddenly we had the concept of a fraud which was more than $1 billion. We had never imagined that there can be an accounting scam of $1 billion, but it had happened. From then till today, we see this every day. Every month, I see at least 5, 10 big cases. Obviously, some come into media, some don't come into media because of sensitivities. But yes, the volume of fraud, the money that is connected to fraud is getting increased phenomenal every point of time. In fact, if you, I recommended everyone to go and study and read the reports which are issued by organizations like ACFE, UN, in even India, we have started like this. It details out how, which sector, what kind of financial loss is happening because of the concept of fraud. And the amount is significant. No company can shut their eye today when it comes to fraud. What is the cost of fraud? Everyone talks that we should talk about fraud, but let's understand what is the fraud. It is not only the money. It is not only the word fraud. There are at least 10 different impacts of any fraud in any organization, and it is across. It is not only to the promoter. It is to everyone, every stakeholder, be it the promoter, the employee, the investors, the bank, and the chartered accountants like you and me. First impact, human impact, very essential. Fraud has capability to actually destroy organization. It can actually destroy life of individuals, employees, their families, their careers and communities. We have seen in past where big organizations like Satyam, which went out of business, it impacted lives of thousands and thousands of people. Big organizations like ILFS, big organizations which got completely shut due to banking frauds. Lives of thousands and thousands of people have been impacted. So that is the most important impact which individuals often forget, but that is there. Outcomes impact. What happens after a fraud? A fraud or any organization has the ability to deliver, it compromises the company's ability to actually perform. The company is completely stopped, company is completely destabilized, and this can lead to a significant, a domino effect on the entire organization. Third most important, people don't focus on is reputational. Now people have realized that if a bad press in a media or in a social media post comes out against a company or individual, your reputation is lost. Because in the end, promoters or companies or individuals like you and me always worry about our reputation. But a bad news about a fraud can actually destroy your entire reputation for your entire life. So that's why reputation is the most key when I personally see the impact of fraud. System impact. System impact is what? It basically drains your entire resources across all your areas. When you investigate a fraud, the outcomes of it is that you do investigation, you do compliance, you do prosecution, you do several things which drains the organization. Industry impact. Let's take why I'm saying industry impact. NBFCs in India, NBFCs saw significant fraud. Because of those situations, the NBFCs have now under much more limelight and much more scrutiny. That's why it is impacting the entire industry. So one bad apple has impacted the entire industry. So that's why important that we understand this thing. Environmental impact. Certain frauds do also have the connection to pollution and damaging our ecosystem. Not though much in number of cases, but yes, we have seen where people have fraudulently done something to an organization which has an impact on our environment. So that is there. Security impact. A lot of organizations have significant amount of confidential and proprietary data. And sometimes this data can be in form of a data which impacts the security of an organization. So when we say a fraud can have impact on security, yes, it can have impact on security. Obviously, financial impact. Financial impact is given because any kind of fraud is typically done with an intention to either steal money at that point of time or steal money in future. But always there's an intention to cheat the stakeholder. And then business impact. As I said, all this culminates into one thing, and businesses have been impacted everywhere. In fact, because of the issues which have been faced by banks, primarily as said, that the insolvency process has opened up several forensic audits. What has it done? It had tightened the screw at the banks. Banks are now hesitant to give loans to companies. Banks are now being much more cautious. What has it done? It has impacted the business. So people who depend upon large amount of capital loan, large amount of term loan, they are now facing intense scrutiny. I'm talking about genuine, honest promoters. They are also facing intense scrutiny and they are not able to get the loan easily as they used to get 10 years back. Obviously, because of so many bad apples we have seen in our country, be it from the infamous Malia case to Nirav Modi case, everyone had been taking money left, right, and center for last 15 years. And when it came to an NP situation, they just ran away. So it has impacted, apart from the other companies, the other individuals who are now in that business, say jewelry business, say airline business, say road construction business, they have been impacted because of it. So the point is, the fraud impact is multi-domain. People often miss on the smaller aspect of fraud, and that's what I was trying to indicate. Coming to corporate governance. Now let's understand why we talk about corporate governance. So corporate governance in India is a very large concept. What I'm focusing right now here is a very pointed element towards fraud. When it comes to corporate governance, the two important elements of fraud investigation or forensic audit is internal control and process, because under a larger umbrella of a corporate governance, these two pillars of corporate governance are very essential because they help you in mitigating the problems of fraud. They help companies in protecting against fraud. Then basically what happens? It's dealing with customers, management, employees, and government. So that's how it is there. What are the relevant aspects of a corporate governance when it comes to fraud? 4 elements. Internal control, as I said, because internal control, even though it appears to be a theoretical concept and people may not take it seriously, but when I see it from my practical experience in thousands of cases, majority of cases, what we come to know is that the fraud happened because the internal control was weak. So never in our practice, we should let go internal control failure. That is the root cause of majority of frauds. Application of controls and financials by KMP. Generally, we have seen that KMPs rely upon their junior employees and they just sign on the certification saying we are satisfied with the controls and financials of the company. Another important element is the whistleblower. So the Companies Act, when got amended in 2013 and then further in multiple amendments, the Companies Act mandated that every company in India, a class of company in India, should have a hotline mechanism or a whistleblower mechanism. This has actually acted in good interest of the country. What has happened is, since last 7-8 years, we have seen the number of whistleblower complaints being increasing by like exponentially. I mean, I know one company where they used to not even get 1 or 2 complaints in a year. And today that large company gets at least 1,000 complaints. Imagine the kind of help that is being done by this kind of mechanism, thanks to the amendment to the Companies Act, which pressurize and force the companies to start this whistleblower mechanism. No more you can hide the complaints under the carpet. Because this also connected with the amendment to the CARO, which was recently done, where now it is mandatory for the companies to disclose all the complaints received by them to the auditor, so that auditor is also aware. Earlier, what used to happen is that auditors were kept in dark and they may not have been informed of all kinds of complaints, but that is now changing. And the fourth element, which is connected to corporate governance, is the disclosures of fraud and forensic audit. Recently, there has been amendment to CARO, there has been amendment to the listing agreement also, where there has been much more focus on disclosing investigations and forensic audit. So these are the elements of corporate governance which are important and they connected to forensic audits. Let's now understand the elements of corporate governance into detail. What are the four important points what I believe and I have seen in my industry or my colleagues, peers who believe this, and that's what is the global practice. So risk mitigation and compliance. The most important element is that the companies have to be on track with respect to policies and laws of the company, and they have to ensure that they have a strict risk mitigation mechanism. You know, it do appears like a theoretical, but in real world, this risk mitigation does help. And it kind of helps you in identifying the risk. For example, what are the business risk, what are the political risk, what are the technological risk, what are the economic risk. It is important to focus on these elements of risk and then mitigate them and do the compliance with them. Then how is corporate work helping us? It is enhancing the shareholder value. So for example, someone like me or you who invests into say share of a particular company, if you see that the company has, like a lot of people talk about Tata Groups of company in our country, where we believe that their ethical values, their ethical concepts are much stronger than other companies. Why do you and me believe so? Because we have seen the company demonstrate that. That is how you enhance your shareholder value. So when we say shareholder value, it is culmination of various things demonstrated by a company to an outsider like you and me, so that we have trust and we can invest money in that company. Public perception is improved. Now, when you and me know which company is perceived to be in public is perceived to be honest, corrupt, shady, and all, that's how the public perception is built, and that's how it drives the value for the shareholders. And the fourth important element is the improved organization efficiency. Better governance can ensure you have a very strong corporate performance, a systematic way of growing, an ethical way of growing, and then it helps you in global tie-ups. A very important point which our Indian companies used to miss 10 years back is the focus on ethics, compliance, corruption, bribery. But now when they interact with their US counterpart and European counterpart, their first question to Indian companies is, how ethical are you? How compliant are you? So this has forced our company to have much more organizational efficiency. That's how we are changing that. How a typical corporate governance framework looks. Again, I'm talking more from a fraud perspective. So if you see any company, you'll have the CEO and the committees, various committees below that. Primarily, there are two broad elements: an internal committee, which is headed by, say, a vigilance department, and then there is a committee which is below that, which looks after ethics, compliance, human resources, and internal. These are 4-5 things are nothing but the pillars of strong corporate governance, which ultimately helps you in mitigating the fraud. When it comes to vigilance, which is on my top side, there are 3 things which typically companies do and good companies do. They want to prevent the fraud, they want to detect the fraud, and they want to punish the fraud. Simple process: prevent, detect, and punish. If you have all these 3 elements in any organization, the possibility of happening of fraud decreases significantly, because you have 3 sticks. One is a preventive stick, one is a detective stick, and one is a punitive sticks. Use them efficiently, the company will have lesser amount and lesser number of frauds. What is preventive? Having strong policies, controls, regulatory functions, procedures, even though they appear bookish, even though bureaucratic, but they are important, because that's how you prevent some kind of misuse. Then second element which companies are now investing is surveillance and detection. A lot of companies are now investing money, time, and effort on doing detection. So they don't want to wait till the time problem happens. They want to detect the problem at the time when it is happening, so that they can minimize the fraud. For example, they know one employee is stealing money by doing XYZ activity. So they don't want to wait till the end, then someone raises the complaint. They want the data to predict that X employee in Treasury Department is fabricating RTGS transactions and transferring money to relative. This is a real case. So the companies want to have a surveillance on their data, on their individuals, on their processes. Obviously, keeping in mind the privacy of the individuals, but they want to have surveillance and detection on employees and transactions so that they can identify the patterns. And third important vigilance element is punitive. Once you have a case, companies, earlier you were kind of shy to file a complaint or sack an individual or do an FIR. But in today's situation, companies are much more open to take punitive actions. For example, they can terminate an employee. For example, they can file an FIR with a police station for cheating and forgery or diversion of assets. So those kind of things are now happening much and much more. So these 3 elements together make a very strong pitch for preventing fraud in future. Then how do we integrate it with our legal and regulatory authorities and the other 3 functions of ethics, human resource, and internal audit, because these 3 are also connected. What is the role of ethics? Ethics role is to create a framework, to create control assessment, to monitor the surveillance, to report to the audit committee, conduct investigations, conduct reporting of fraud. So that's the role of ethics and compliance team. What is human resource doing? Human resources inculcating those behaviors in their employees. They train employees, they understand the behavior of employees, they kind of provide that support for employees to understand the company policies. And in a worst case scenario, they are also strong enough to take actions, like, for example, termination or penalties. And internal audit is also a linked function. Internal audit is like one of the important torch bearers of investigations, because internal audit is the first gatekeeper. They are always there in the company 365 days looking at transactions. So they can identify the pattern of fraud and report to the management saying, look, something suspicious is happening there. So that's why internal audit is also critical. So this is a broad framework of corporate governance, which all combined together can get into a very strong fraud prevention mechanism. What will happen if you have a very poor corporate governance and with respect to problems within the reporting system? We will have our board management will be under constant pressure to maximize returns. When you have an absence of well-developed and implemented government policies, it has its own side effects. This above pressure can lead to use of creative accounting skills. So what we have seen in past, where companies used to book profit or book sales much in advance, which is called as creative way of accounting. What is the idea or reason behind that? Just to get a right amount of profit shown in the books of accounts, or to the shareholders, or to the private equity investors, or to the bankers. If we don't have honesty and transparency in reporting, the cases will not come to light. There will be no oversight by the auditors, as audit will not provide absolute assurance. If you don't have a very strong mechanism to report problems, how will it reach the auditors? How will the auditor have that comfort over the company that, okay, everything is right? So if you don't have that kind of mechanism, the issues don't come into limelight, the issues never get reported, and it ultimately impacts the company. And what happens if you don't have an effective internal control mechanism? The focus on controls goes down significantly, and it opens up a wide field for fraudsters. So when I'll come to the element of the fraud triangle, you'll see that if there are no internal controls in a company, or there are no effective and efficient internal control company, it opens up the gate for fraudsters to conduct multiple fraudulent transactions. That's what we have seen in our past. So how do we integrate forensic audits and corporate governance? So let's understand both of them. I think the most important difference, what we need to first understand amongst ourselves is what is forensic audit and what is financial audit. It is one of the most confused problem in our country right now. Even regulators, we have seen a lot of regulators, be it when we interact with CBI or AD and all, there is always this element of understanding that what is a forensic audit and what is a financial audit. And that's why it is important for us first to be very clear in our mind, and for us to educate to the outside world, this is forensic audit, this is financial audit. Both are not same at any level. Let's get into each of the elements. Objective of forensic audit, it is primarily to report on facts and evidence of a particular allegation of fraud. It doesn't talk about materiality and all those concepts. Even if there is a 500 rupees fraud, and if that case is given to me for investigation, for me that 500 rupees will be a material fraud, and my objective in that case would be to find out the facts and the evidence of that 500 rupees fraud. Whereas when you go to a financial audit, what you will see there? You will see it is an opinion on overall financial statements, which is based on the underlying internal controls and materiality. So the concept and the reason for doing financial audit is totally different. The objective. Scope is very focused. In case of forensic audit, the scope is always focused on the issue which is on your hand. So for example, if it is a complaint about money being taken from bank and siphoned out, then your focus will be on that particular money which was taken from bank and how it was utilized. Whereas the scope in financial audit is broad. It is prima facie at the entity level, because the auditor is kind of giving opinion on the entity's financial statements. The scope is determined based on the complexity of the allegation in case of forensic audit. Whereas in the case of financial audit, there are applicable statutes and regulations which guide how a scope of forensic audit should be there. Sampling methodology. Sampling methodology in case of forensic audit is quite dynamic. Sometimes it is done on risk-based approach by identifying red flags, or sometimes it is 100%. For example, there was an allegation of a profit overstatement of $25 million by a company. So in that situation, we were told to look at all 100% sales of that entity for 18 months. So there was no sample. All 18 months, $500 million sales transactions have to be reviewed thoroughly to identify which are the fake sales, which are the real sales. So there is no concept of sampling. So that's why I'm saying sampling is very random and depends upon case to case. Whereas in case of financial audit, we have enough number of guidance available on how a sampling should be there, how a random sampling method or a statistic sampling method has to be used, and it has to be presented in a manner. Engagement team. Typically in investigation, you will find it is mixed of skill sets. CAs, CFEs, engineers, lawyers, intelligence professionals. These are also very critical resources because they are on-ground intelligence. Somewhere I'll explain you why it is important, but the root causes the fraud not only happens in the organization. The elements of frauds are also existing outside the organization. So you have to go outside, gather the evidence and come back within the organization. So that's why intelligence professions are important. In case of financial audit, typically the resources are only chartered accountants. Sometimes depending upon case, we do have experts like CISAs and industry specific experts if that situation requires. But more it is case of chartered accountants. But if you go back to forensic audit, what we see in India today is the forensic audit is primarily led and managed by chartered accountants. They have their associates with them who are non-CAs, but again, in the end, because it relates to finance, it relates to accounting and business, it is typically handled and led by CAs. Then related party. Related party in case of financial audit is purely driven. Financial audit is purely driven as per the applicable laws and accounting standards. But when it comes to forensic audit and investigation, the line is gray. We don't only depend upon the related parties. There is a concept called connected parties. There is a concept called connected entities, which means that even though they may not necessarily be related as per the Income Tax Act or Companies Act, but because they are related, for example, we have seen in many cases that promoters use their employees, even drivers, even small staff like office staff and all those things to create shell companies and make them directors. Technically, they are not related parties as per IT Act or Companies Act, but for us as forensic auditors, we have to look beyond the law. We have to look at the intent of the transaction, and that's how we have to be much more flexible and call a transaction as a related party if it is a related party. As simple as it is. How do we enhance the corporate governance using forensic audit? So what happens is under, if you look at broad areas of expertise as forensic accountants. So what is forensic accountant and forensic audit? Audit is a much more wider process. Accountants are people like you and me who use forensic skills to look at the accounting transaction. So let's understand the difference. A normal accountant gets into accounting transaction. A forensic accountant uses forensic skills for the purpose of accounting. And in simple language, what are forensic skills? Forensic skills are scientific, evidence-oriented skill. The skill which looks at the transactions from evidence. The individual only thinks of evidence every point of time. So that's why forensic accountant. So what does a forensic accountant look at? Apart from in-depth knowledge of financial statement, the individual also has thorough understanding of fraud schemes and ability to uncover abnormal patterns. Very important. A person who knows more and more fraud schemes will be easily able to identify a pattern of behavior and say, okay, here there is a fraud, here there is a fraud. Then the individual has ability to comprehend the internal control system and assess the weakness, that if the control weakness is here, this is where the problem would be lying. The individual should have proficiency in computer and network systems, because a lot of time fraud is not only in a simple transaction. People do use complicated network systems. Then another important element, understanding human impulses and behind criminal behavior. So what happens is a criminal behavior, specifically when it comes to financial crime behavior, it can be identified. You need to have that kind of skill set, which will help you in identifying the behavior of an individual. Then you should have sophisticated interpersonal communication skills to conduct interviews. What are interviews? These are not our job interviews. These are suspect interviews. What happens in a suspect interview is that you have a suspect sitting in front of you. You have the evidences against the suspect. You have to question the suspect in a smart order so as to extract a confession or clarification so that you can use in your future proceedings. Then you should have thorough knowledge of best practices and laws. Laws is important. You should understand some bit of elements of the Evidence Act. You need to understand some bit of element of Money Laundering Act, Income Tax Act. So all these elements of laws are important because they will come and go with you hand in hand when you do investigations. You should also understand the criminal, civil law and the litigation procedures, because when you are doing investigation or you're doing forensic audit, your expectation from your client or whoever is engaging you would be to give them a complete advice, not only find a problem and keep on the table. You should understand that when you put out a problem on the table, you should be able to explain why this is a problem, what are the evidences to the problem, what will happen tomorrow this go to the court, how should you interact with lawyers. So you should have these kind of specific skill sets. And when it comes to forensic accountant, further, when you look at it, they also assist in formulating and establishing comprehensive governance policy, which the idea is to ensure compliance. Then we also have to focus on establishing and monitoring efficient internal control so that we can record transactions, report relevant transactions, process controls, all those things. And obviously monitoring of vigil mechanism. It is also a critical element because a lot of companies will receive hundreds and hundreds of cases. How do you decipher those cases? How do you identify which case connects to which department, which function of accounting, finance, business, purchase, sales? So you need to understand that and accordingly investigate that. It's also a critical and important job. Then LODR, the listing obligation. So there are certain specific elements. As you know that LODR has been getting amended regularly. In fact, the last amendment had significant focus on fraud element. And though it doesn't directly cover, but it does put emphasis on the element of fraud. So for example, regulation number 9, it talks about documents to be preserved by the board because those are evidences. 16 to 19 talk about independence of the independent directors because the independent directors have power to question transactions. You know, you would have read in last month also, there have been a lot of articles where the government has been talking about strengthening the powers of independent directors. In addition to that, putting the independent director in a position where they have to answer to the situation. Because if you go back to cases like Satyam and all, everyone questions what were the independent directors doing? Why were they quiet? So that's why this is important element. Then the review of code of conduct is important because code of conduct drives the entire concept of how a company employee should behave, and the code of conduct should be in line with the today's requirement of the law and the situation in the business environment. Then the regulation 18 talks about assisting the audit committee in performing responsibilities for inquiries, financial information, and investigating red flags. When we say red flags, it is basically fraud investigation. Another important element, reviewing vigil mechanism. So if you see, every law focuses on vigil mechanism because vigil mechanism has that ability to bring out all the problems out of the carpet and put in front of you. Then identifying potential connected parties. So let's look at here. They are not only related parties, they are also talking about connected parties because it is important to identify the real intention of an entity. If someone is misusing the concept of related party definition, it should be brought out. Then how to handle the material unlisted subsidiaries, that's also important. Then disclosure of material interest filed by each director and the participation of such directors, that's also critical. So if you again go back and look at the laws, be it SEBI, LODR, every law is now focusing on the elements of corporate governance, which ultimately impacts fraud in some element and helps companies in reducing fraud, mitigating, detecting, and identifying. Always remember mitigation, detection, and investigation. These are the three elements which any law will focus on. When it comes to role of auditor in reporting fraud, I'm sure most of you would have seen or read section 143(12) of Companies Act, which had kind of talked a lot about how to report fraud when it is identified by the auditor. And the institute has also issued a guidance note on this, which is a very detailed guidance note, which has helped professionals like us in being very clear and what kind of fraud has to be reported by auditor, what kind of fraud has to be reported by the management. Because see, typically a fraud can be identified by the management during their regular reviews, like internal audits or ethics review, or a fraud can be identified by an auditor, say by accident. Like we have seen a lot of cases where auditors, while doing their regular duties, they suddenly uncover a fraud scheme. So if they have identified a fraud scheme, then the government has mandated them as per in Companies Act to report it to the central government, specifically to the MCA in a specified format. And that's how it has become much more stringent. If you see in recent past, these reportings have increased in India and it is in public domain because you have to file it with stock exchanges. Then there are elements of fraud which are investigated by the companies themselves, not by the auditors, by the companies. For example, if you go to any big, large corporate in India, they'll have their own internal investigation department, or they'll work with someone like me to assign cases and investigate the crimes. So these cases are under the instructions of management. These do not fall under the review of auditors because it is done by the management. So they don't qualify to be reported in this manner. They have a separate reporting structure, which is guided by CARO and other elements. So now we have understood the background, we understood how corporate governance is essential, why we talk about forensic audit and all those things. Now, some bit of pointers to you on what we talk about early indicators of fraud. So now what I'm going to present to you is our real cases. So what we have done is we have done several investigations and we have converted those investigations into red flags or early indicators, as I call. And these are all real cases which we have investigated and found to be a problem of a financial crime. So for example, sudden increase in revenue without corresponding collection. So this was one of the indicators which the auditors had missed that point of time. If they had focused on this, it would have come out. But nonetheless, it was identified by the management, not the management, by the investors, flagged off to the audit committee, assigned to us as an investigation. We investigated that and found that the company had obviously siphoned off money by way of booking fails, fake sales and all those things with an idea to increase the profit of the company. What was the red flag? The red flag which could have been focused on was increase in revenue without collection. Very simple, mundane job which we would have learned in our CA days, but these are very important indicators. Second, in our country, sales are, if you see, sales are made to agents and not direct customers. See, we Indians love a lot of middlemen. We have always been a country of middlemen. And whatever said and done, middlemen always came with that gray shades, because somewhere there was an issue of identity behind the middleman, somewhere there was an identity issue of passing off certain profit to a middleman, those kind of things. So whenever you in your day-to-day job, you see that sales are made to agents and not direct customers, I believe it is important for you and me to question them, that why are we making sales to an agent and not to customer? Is there a valid business justification? Is there a business need? Or it is just a ploy to create a layer in between and transfer certain profit? So it's a red flag. I am not saying that it is a fraud. It is a red flag. Go beyond that intent of that transaction, why it has been structured in such a way, find out the reason and then move ahead. Then growth in debtors is significantly high as compared to growth in revenue. Again, connect to my first point. If you see that growth in debtors is kind of moving much more aggressively as compared to the growth in revenue, what indicates to me that the company has changed the pattern of collection period. So if initially it was say 30 days, they have moved to 90 days. But is it right? If the question is no, then you will question yourself, then why the debtors are increasing and sales are not increasing in that in revenue kind of thing. That means a lot of sales are getting booked, but the collections is not happening. That means the sales are fake sales, only recorded with an intent to create an artificial sales and profit. It is very normal. So, in our country, you would have heard that a lot of private equities invest money. So what they do is when they invest money, they have a period of say 2 years, 3 years. So if they're investing say $100 million, they'll say that if in next 2-3 years you perform to X amount of EBITDA, then we will do this kind of valuation for your shares and we'll buy out your company. So the promoter has that carrot of showing a fancy profit so that the valuation of the balance shares with the promoter can be sold at a higher price. So most of the Indian promoters which have been in fight with the private equities, they have used this as a mean to book fake sales and show artificial profit. Why I'm saying so? Because you as a chartered accountant, you will spot this thing instantly because you have that skill set, you have that ability to identify these kind of patterns and attack the situation and flag it out if it is a problem area. Then sometimes we have seen that addition of a new customer which has a sizable revenue as compared to others. So let's be honest, in our country, it is difficult to get new business and that too from a company. But when you see a new customer added in a company and suddenly getting big amount of business, how is it possible? Identify, is it just a front of someone or is it just a layer to divert sales? Find it out. Because let's be honest, you and me, if you want to start a company tomorrow and ask for a business of crores of rupees, you'll not get it. You have to struggle to reach to that particular level. But if you see that happening in a company, then you have to question that intention. Then sales made to customers who have very less existence on public domain. Again, let's be honest, if there is a company which does business of say 200 crores, there will be some amount of public domain information. Ownership structure, who are the owners, promoters, address, some web page, something will be there. But if you don't find anything, that is a red flag. That is a suspicious behavior. I'm not saying it is fraud, but again, it is a red flag. Early indicator, go and check who is behind that customer, identify the real owner, and then be satisfied, okay, this is right. If not, then flag it off. Then addition of a new customer who has recently commenced business and is new to industry. Always a problem for me because these are nothing but layers or front companies. These are created by promoters. These are created by fraudsters to deceive the company. Look at it. If you find something new, see, always understand fraud, identification of fraud, red flagging is nothing but behavior of a pattern, behavior of the transaction and behavior of the how company operates business. If anything becomes abnormal or beyond the normal, that is a red flag. We have often missed those kind of things, but I think when I am talking about today about fraud, corporate governance, forensic audit, it is important for people like you and me to never miss these red flags. It may be very simple. It will be like, oh, this happens every day, but that's not the point. The point is, even if it is simple, it is called as turning every stone and checking below it, okay, if everything is not right or not wrong. Because that is what your and my job is. So that's why I always believe in early indicators will help you in investigation and prevention of crime. Then revenue pattern indicating high increase of revenue month end, quarter end, year end. This is a standard scheme used by a lot of pharma companies, consumer companies, because they have, and not by the companies. What happens? There are salespeople, there are CEOs, their bonuses are linked to performance. So what they'll do, they'll say, okay, I dispatch 50 crores extra, and they tell to their distributor that you take the sales and after 1 month, return it to me. It is only done to get that extra bonus from the company. Find out this pattern and see if this is actually an intent or this is just a deceit kind of way of doing business and deceiving the stakeholders. Then these domestic sales are made to small proprietorship partnership firms. So I'm talking about here with large companies. Typically, we in India have moved towards a corporate structure. We are no longer a world where we only deal with partnership and proprietorship firms. If you see companies, large companies, they'll typically deal with limited companies, limited liability partnerships, and similar kind of corporate structure. I have seen in my life and my experience, wherever there are small proprietorship firms or partnership firms who have less transparency, because what happens in proprietorship partnership? there is no information available on them in public domain, unlike companies and LLPs. If I find something like that, what I do is I go behind those entities and see why it has been done. Who is the real owner behind it? Is it just a layer created? So find out. Then another important indicator is significant variance in EBITDA as compared to previous years. Example, again going back to one of the private equity investigation I did, the company got an investment of say $200 million. Before the investment, the company was having a consistent performance of EBITDA, say 50 million, 52 million, 55 million, 56 million, 70 million. Suddenly the investment comes into the company and the EBITDA goes from 70 to 150 and 150 to 200. It is very difficult to digest, because unless you have done something phenomenal and you have created something like an Uber or Ola or something phenomenal in terms of business, that your business goes this way. But if you're a standard company in a standard industry, this kind of variation EBITDA is not digestible. It's a red flag. Go and check why it is happening. Is there a reason for it? You may find that it is done intentionally to create an EBITDA out of air by booking fake sales. So we have done with revenue. Now I'll move to indicators of fraud when it comes to expense. Expense is where you take out money. Revenue is where you create an artificial situation. And expense has always been our favorite, because 80% of my investigation in my life have been expense, because someone has taken out money while doing expense, because the expense is the easiest way to cheat and fraud. Because what happens in an expense? The individual has power to spend money for the company. This power to spend money gives the greed a way to do fraud. So that's how most of the frauds you will see in a typical company is expense fraud. So how does it happen? Classic case, the first case which I'm talking about, it is of a very large Indian company, in fact, very reputed company, cannot disclose name. So the company used to purchase machineries from agents instead of original manufacturers. So for example, what used to happen is the company used to buy, say, Chinese machineries, expensive machineries, $10 million, $20 million. Instead of buying directly from these suppliers, the machineries used to go to Dubai. There will be a shell company in a Dubai Free Trade Zone, and then the Dubai Free Trade Zone company will supply it to Indian company. What we found is that the Chinese company will sell the machinery, say, at 100 rupees. The Dubai company will sell the same machine to Indian company in 1,000 rupees. I'm not exaggerating, these are the real numbers. The value of machine was inflated by 10 times. Why it was done? Because the promoter, Indian promoter, wanted to park the excess 9 times money in Dubai. Where did the money came from? Banks. So he took money from banks as loan for purchasing capital expenditure, inflated the machinery price by 10x, parked the money in Dubai, got the machinery, but 10x time, parked the money in Dubai, and that money came back into India by way of private equity investment, got invested into land. Complete fraud mechanism, how to take money from banks, inflate the machinery purchases, and divert the money. That is how it has been done. And this was a big company and a big PSU bank. We uncovered it, went into a big amount of investigation and regulatory issue. But that's how it happens. How did we identify it? We saw that the machinery was a very big brand, and the purchaser was from some local LLP FZD company in Dubai. We said, if, for example, if you're buying, say, a big expensive car, for example, Mercedes, you'll go to an authorized showroom of Mercedes. You'll not buy from a local shop, right? That's how we found here that this machinery is an expensive machinery, branded machinery. Why would you buy it from a small time company, that to a Dubai FZD, where there is no manufacturing? It is just a trading entity. So that's how you'll be able to identify it. Then recurring expenses are made, purchases are made from single vendors without obtaining comparative quotations. So comparative quotations is a mechanism, is a control mechanism employed by company to ensure that you are getting right price. But what happens is that a lot of purchasers, people who have power to spend money, they defraud company by buying from single vendors without getting into market. Because if they get into market, they may find a lower amount of value and they'll be forced to buy that. So they don't do that. What they do, they create fake situation that there's an urgency, there is only one vendor available and buy from that vendor. That's how they do those things. But you find situation, it's a red flag. Then machinery raw material is purchased, which is relatively higher from market price. Nowadays, we live in a world where it is easy to identify the market price because thanks to multiple forums which are on their public domain, you can go to several trade sites and inquire for the prices of any kind of machinery raw material. You'll be getting it within a day's time. So you no longer have to struggle on getting the right price of a commodity or a machinery. It is easy to go on public domain and find it. Just an effort which we have to do. So when we do investigations or forensic audits, we always go on public domain and these sites and inquire for real prices, and we get ourselves comfort that okay, the prices are right. Then there is sudden increase in expenses without increase in revenue. So our theory, practical theory, not a written theory is that your expenses and your revenue generally tend to behave in the same manner. At least the variable expenses, not the fixed expenses. They generally tend to behave in a particular manner. Simple example, one company wanted to take money from private equity and they said that it was a pharma company. They said that our business has increased by 3 times. So originally, and it's a recent case I did, in 2018, they said we had the turnover of 250 crores. And 2020, within 2-3 years, they said we reached turnover of 750 crores. That is 3 times. We said, very good, fantastic. So you have achieved such amount of growth. Then we said, okay, show us your expenses. All expenses were fine. Then we picked up one particular expenses, which was electricity bill. We said, show us your electricity bill. So they showed us amount, which was right. We said, no, we don't want to see the amount you booked in your system. Show us your physical electricity bill. And then we compared the electricity bills, units, not amount, for the entire 3 years. And to our surprise, the units were always same. So there was no change in the consumption of units by the company. So the next question came to my mind is, then how did you increase your manufacturing 3 times? Without utilizing electricity, you cannot do the manufacturing 3 times. I can understand increasing 15%, but increasing 3 times, you would need 3 times the amount of electricity. There was no answer. We concluded it is a fraud way of reporting of revenue, and the company did not got the investment. How did we find? We found way of expenses without revenue because this particular expense was not, moving ahead. So that's how you have to be very creative when you look into these kind of red flags. Then large amount of discounts being offered by vendors. So this is also interesting scheme. What happens is that a company is not able to meet its profit, falling short by say $2 million. They'll call one of the vendors saying that, why don't you give me a discount? So that will help me in reducing my purchase price. And after 1 year or after 6 months, I will give you money in a different way. So you get a discount from vendor, you reduce your expense, you increase your profit artificially. A very unique way which was done, I know, in one case, but that's how it has been happening. Then there's significant variance in volume and value of provision of expenses. Again, volume and value. Always remember, don't only believe on what is shown to you. Go beyond that, beyond the factual screen in front of you, and look at the underlying evidences. Then high amount of purchases from vendors who are not known in industry and have very less credentials. Same like customers. Here also, if there is no vendor which is in public domain and you're buying from that vendor, say 500 rupees, there has to be some presence. There has to be some credential. It cannot come out of where that a vendor is there which is supplying 500 rupees. So always remember, to know the real individual, you have to go behind what is shown. Then large number of unexplained JV entries in vendor's account. I always question JV entries. JV entries is our favorite way of finding out the problem area, because typically JV entries, though it has been created for a right purpose, but a lot of corporates use it for wrong purpose to pass on entries which are fraudulent entries. So we always start with JV entries and find out what is the problem point. Then regular advances are paid to certain vendors, whereas certain are paid on long-term credit. Look at the pattern. For example, you are buying from 10 companies, 10 vendors, and to 8 vendors, you are paying money after 90 days. But 2 companies, 2 vendors, you are paying in advance. Something is terribly wrong, because that is not how business works. Find out who are the real people behind that, and is it just a way of passing off profit? Cash and bank. Again, cash and bank is one of the most problem areas when it comes to fraud by treasury and those people. Bank reconciliations are not, they have regular open items. Physical bank statements are not provided by the company. Balance confirmations are not obtained. Large amount of cash payments to contractors, cash withdrawals, cash deposits. Another interesting point I want to highlight is this one. Accounts of some key suspicious and vendors are often serial numbered and with lesser known banks. Real case, interesting case. So what a company did is, company took loan from a PSU and said that we need the loan for working capital. I think 150 odd crore rupees. And this money was, they received on 28th of March, and immediately on 29th of March, the money was transferred to 3 accounts, saying that these 3 accounts are pertaining to 3 vendors to whom the company has given advance for purchase of materials. Fair point. How did we found that is suspicious? When we looked at the KYC documents of 3 vendors, we found that all 3 vendors had account with only one cooperative bank. If I'm not wrong, it was Janta Sahkari Cooperative Bank in Thane in Mumbai area. One cooperative branch, one branch. Another interesting fact which came to our attention was the account number 274, 275, 276. So all 3 vendors had sequence-wise account numbers. That is where as we see, our bulbs started to flash, saying that advance paid for particular purchase of material, 3 entities, less existence, sequentially account number in one particular bank of a cooperative bank. That was enough of red flag for us to conclude there's a problem. Obviously, after that, we went into the real ownership of the entities. We established how the money was given. We found that these entities were nothing but the front entities of the promoters. They have taken that 150 crore, diverted to other entities. That's how fraud was it. But how did we identify red flag? These small things: same bank account number, same branch, similar, not same account, sequence account number, same branch, same location. That's all. Accounting entries. What are the indicators what we saw in real life? Large number of entries passed in books of accounts, journal entries, okay? The journal entries made into unused accounts, unusual. Typically some smart fraudsters have a habit of passing journal entries into some random accounts. They'll pick up account which has not been used, which is unusual or unrelated, and just pass one entry. And they're smart guys. They're in treasury and finance. Then journal entries were made by individuals who don't do entries. For example, a CFO and a CEO. The role of CFO and CEO is never to make accounting entries. But if you find, for example, in today's situation, if you go to something like SAP, SAP gives you the user machine ID and the person's ID who has made the entry. If you find an accounting entry made by a CEO, CFO, you should have your alarms ringing, because why would a CEO and CFO go onto a laptop and pass an accounting entry? Find out what that entry is, see if it has been done without showing it to the real world or the accounting team. Then companies who typically use low-end accounting sifter. I'm not talking about small companies, SMEs or MSEs. I'm talking about large companies who have multi-million business. If they use something like Tally, no offense against Tally, but Tally has been one of the most misused software by the companies because it doesn't have audit trail. As soon as an audit trail is evaded, it is easy for fraudster to manipulate entry. Like in SAP, Oracle, anywhere you go, you cannot do something on backdated. You need to have there are a lot of controls which prevent those things. Whereas in low-end accounting software, there are no these kind of controls. So if I see a company which has big business, when I say big business, say 500 crore business, and I see that company using something like Tally, I have my suspicion. Then I want to know what is the intent. Why is it the company not spending money on a good accounting software? Obviously, they may have their reasons, but again, for an investigator's mind, it is a red flag. Backdated entries passed on accounting records, problem area. Balance of entries. This is also an interesting case. What happens especially in treasury kind of case, what we have seen is that if people are not able to reconcile bank reconciliation statement, what they do is they pass a balancing entry just to hide their fraud. They'll pass entry from one bank to another bank account, balance it off, and close the bank reconciliation statement. There are journal entries that are recorded post-closing entries. Again, you have to look at it because they will give you much more deeper insight. Okay, now moving to the element of how do we manage the fraud risk. So let's understand 3 important elements here. Fraud triangle. I was talking earlier about the behavior of an individual. So fraud triangle is the most important element for you and me to understand, because that will help you in analyzing behavior. I'll come to that. So what is fraud triangle? Fraud triangle is basically a theory done by a scientist who studied the behavior of several fraudsters and came out with this theory. It says that every fraudster will have these three important elements: pressure, opportunity, and rationalization. What is opportunity? So a fraudster will have various opportunities to do fraud. What are these opportunities? Like hierarchical structure, disintegrated accounting system, company's culture, no internal control, lack of access to financial statement to internal audit. So if these opportunities are there with that individual, the individual, he or she, who that person is, that person will know that the company lacks in these things, and that's how that person will have opportunity to do something wrong. Okay, that's how the opportunity gets created. On the left hand side, what is pressure? Why would someone do a fraud? Because there is an economic downturn, and they want to make it a good stock performance. The quarter performance are falling below expectation. There is an expectation to meet the analyst at capital markets, because otherwise the prices will go down. Financial pressure to pay extravagant lifestyle. This is one of the most problematic areas. We have seen in several cases of money siphoning by employees. The lifestyle was an issue. People wanted to buy expensive cars, wanted to buy expensive properties everywhere. This extravagant lifestyle gave them the pressure to do the fraud. Most of the cases, most of the fraudster, what you have seen, they take money and invest in properties, invest in lifestyle and everything. It's always that lifestyle pressure which is there on them. Then comes the rationalization. Obviously, after you have opportunity and you have pressure, you should be have that right mind, or not right mind, a wrong mind to rationalize things. The individual say, that individual ran out of option to make company more profitable. It was one-time act. I didn't do anything wrong. Even my promoter is taking out money. I also took out money. This entire country is corrupt. So what is wrong? I am also corrupt. No one is getting hurt. These dreamy rationalization things comes into mind of these fraudsters, and that's how they rationalize their act. Obviously, these are not logical, but that's how we have seen. How we have seen? Because we have asked those individuals. When we confront during the interview, we ask them, why have you done this? What is wrong? What is it? The individuals have the habit of saying, no, this happened because of this. I thought this will be okay. I didn't have option. All those rationalizations do come into picture. So whenever you are doing any fraud investigation, pick up that fraudster and put him below the dollar sign, and then try to study what was the pressure, what was the opportunity, what was the aspect. You'll actually get all the theories around that individual. It's an interesting thing, because this is how we start the investigation. This is how we conclude the investigation. Before we start the investigation, what we do is we start something called as hypothesis. What is hypothesis? Hypothesis is basically saying that why this company or individual will do fraud. Simple example. Let me take an example of an NBFC company, or a company which has taken large amount of funds from bank, 50,000 crore rupees. And suddenly the company has gone bankrupt, and the company is into losses and cannot meet the loan of 35,000 crore rupees. Why is that happened? The hypothesis only two. One hypothesis, really the company went into bankruptcy because the business failed. Number two, there is fraud. So the first one, I'm not believing that there was a real failure of business, because no one fails into business for 35,000 rupees. So it means there is something fraudulent happen. How it can happen? So if someone has taken 50,000 crore rupees, that means the money would have gone out. Gone out. Where can money go out? Either in capital expenditure or operating expenditure. That's how your hypothesis. You look at operating expenditure, you look at capital expenditure. Wherever you find inflation, that is your problem area. That is where fraud has been done. So if you read the ABG shipyard case, which recently came out in media, there are interesting articles. In fact, it lays out in detail how the money was siphoned out, how the money was taken out in various companies, how the expenses were inflated, how the capital expenses were inflated, how the properties were acquired. It lays out in very detailed manner. It was going on for 10 odd years. Fraud risk management. What is fraud risk management? So fraud risk management is nothing but something like internal audit risk management. This is now gaining much and much importance because earlier people never talked fraud. 10 years back, no one thought about fraud. In fact, the promoter companies never talked about fraud. But today when I meet with Indian promoters, and I'm talking about Indian promoters, assume the top 20 companies of India, they all are worried about fraud. Earlier they never thought, but now they are actually interested in doing, okay, there are employees who are stealing crores and crores of money from me. So they want to know about fraud and they want to actually do something called as fraud risk management. Looks to be a fancy word, but it's actually a detailed study or a detailed mechanism to prevent, detect, and investigate, also called as a response. So what is fraud risk management? Basically, you have three elements. One is you have to have a prevention, which we also call as setting tone at top. What does setting tone at top means? Setting tone at top means the top of the company, the CEO, MD, the board are very vocal and they are loud, saying that there will be no tolerance to fraud, corruption, bribery in our company, full stop. That tone comes from top and goes down. So that means the company wants to prevent these things. How do? They have concepts like anti-bribery corruption policies, they have anti-money laundering policies, they have fraud risk management, loss management policies, they have intellectual property and contract compliance reviews, they have verifications through intelligence, they have physical security. So they invest money in all those elements to prevent fraudulent behavior. These are some of the examples, but they do actually help because when you do something, you don't only create a document, you also create a process. For example, you create a process before giving money to anyone, you check the vendor details, you document it. All those things are done so as to prevent a transaction from happening. But still it does happen because we as a country are interesting. We have interesting individuals who find creative ways to do fraud. So, I always joke with my colleagues that in India, there will be never any shortage of cases of investigation because our fellow citizens have creative ways of finding ways to do fraud. So jokes apart, prevention does help, but at the same time, there are cases which happen beyond prevention also, which is why the concept of detection comes. What is detection? Detection is now the most relevant thing because it talks about to monitor the behavior of transactions and individuals. Regularly do something like data-driven intelligence. It looks to be a fancy word, but it is really a good thing. I'll tell you example. What is data-driven intelligence? It is nothing but defining the fraud schemes into your data and throwing outputs. For example, today's data world for a large company, I can actually define 500 set behaviors in transaction. If that happens, then the output will be a red flag. So I can define in real world and put it into system. It will run its queries, look at data, look at behavior, and throw an output. Then what I can do, obviously ethics helpline is important. I can do pre-exit diligence on forensic diligence, pre-exit digital forensics. I can look at digital evidence recovery. I can look at fraud investigations. I can look at ethics helpline. There are several things which you can do for detection. And what is reactive? Reactive is nothing but incident response. What is incident response? If, for example, a situation has happened, despite of a good preventive detection mechanism, still something happens, then what do? You have to follow the problem area. You have to take that painful process of investigation, quantification of loss, claim, then there you have experts, you go to litigation, you do data breaches, you do e-discovery. So there are 10 different steps which has to be done as part of the response. It's a painful process, expensive process, and that's how we have to live with it. There is a problem, then the problem has to be treated. You can't escape the problem. So that's why the companies want to invest more and more in prevention and detection so that the problem of response is minimized. So out of 100 cases, they want to detect and prevent 80 cases. So let's say only 20 cases are remaining for the purpose of response. Obviously, the idea is to make it 100% on the left side and 0 on the right side, but that is not a practical element because frauds will happen. You will have to respond to situation. But again, the more and more you can prevent, the more and more you can financially benefit. Setting the pattern tone at top. So what are the elements when we talk about tone at top? I said fraud risk, loss management. So what happens is, what is that? It is understanding the fraud risk of company. Every company has its own unique fraud risk. When I mean to say company, I mean to say industry. For example, a real estate company or a pharmaceutical company or a consumer good company or a toll road company, a power plant company, a steel company, or say a private equity company or a bank company. Every company has its different risks, different way of fraud. So you need to understand first what are those frauds that can happen in that industry. Then only you can do the measures to mitigate the fraud. So first element, understand, then evaluate the existing measures you have to mitigate those fraud items. For example, if I'm in bank and my risk is fake accounts getting opened, inadequate KYC. So you then go and check what is your KYC process. Is it strong enough or is it just formality? So if it is formality, then you strengthen the process. Then you develop effective anti-fraud policies. For example, if there are policies which are not there in a company about getting quotations from 5 vendors. So you implement that policy so that every employee is forced to get quotation from 5 vendors and then decide upon price. Then training of staff is very important. Nowadays, companies are investing heavily in training of staff. Anti-bribery and corruption compliance. This is essential. And this is why it is essential, because you also need to understand in India, there is something called as Prevention of Corruption Act, which got amended in August last year. That is now also covered a bribe giver as the primary offender. So earlier, the Prevention of Corruption Act was more on government officers, but now the amendment puts pressure on the companies also. So that's why it is important that we educate the stakeholders that anti-bribery corruption is an important element. It is no longer a smaller elephant that used to sit in our problem area. Now it's a big elephant which you have to handle. Again, it is same like fraud. You have to have policies, procedures, monitoring, due diligence, and all those things. Verifications at the end of onboarding. This is again important thing. What happens is KYC. So KYC is not only for vendors, third parties, even for employees. It is important that you check who are the people you're dealing with. A simple Google check can find out whether there was an FIR for fraud, whether there's an open case or litigation against the individual or a company. It's important to know who we are dealing with. Counterparty diligence is also important. Counterparty is basically if you're doing a business with other party, you would want to know who the other party is, what are their background, what are their antecedents, what are their case histories and all. So that's why it is important. Anti-money laundering compliance. Money laundering is now become a very complicated issue in our country. You would have read that the enforcement director, which oversees the prosecution and enforcement of AML compliances, is become very active in our country. AML is simple. Any kind of money that is flowing from crime is a money laundering. And the number of crimes are hundreds. So any money which is connected to crime has become a problem money, and that is impacting companies also. So when you see all the cases in media, be it politicians or bureaucrats getting arrested, you only see the one element of the problem. The other element is companies also, because when someone gets arrested, the companies are also getting investigated. So you only see the politician's face or a bureaucrat's face, but behind that transaction there are companies. And when it comes to companies, then it comes to the knowledge of people like you and me, because we are anyway somehow part of such accounting world. Then comes the data analytics. What is data analytics? Data analytics is becoming very important tool. Data has ability to predict behavior. If you can scientifically use your data with right tools, you can actually predict significant amount of fraud patterns. Ethic helpline, we have spoken, very relevant. Digital evidence discovery is a forensic technology. A unique thing which people like us use is looking at computers, emails, text, messages, transactions. It's a very fancy thing because you get access to the electronic information. You can go through it, because a normal auditor, when we used to do audit in our days, we didn't have access to emails. But as an investigator, you have that access to emails and all the hidden data, so-called hidden data. So that's why it is most important piece of our work. Then comes the cyber. Cyber is now becoming another different element. Some or other ways, cyber is connected to us, because when there is a cyber attack, ultimately it impacts the financials of the company. Ultimately, someone is stealing out of the company, either in form of money or in form of intellectual property. Even intellectual property has value. So cyber fraud is not only a technical fraud, it is also a financial issue which people like you and I have to deal with. So these are important detective measures. Reactive measures, as I said earlier, incident response, e-discovery, cyber investigation, and quantification process. Incident response is nothing but getting into the shoe of investigator, finding out the problem, how it happened, where it happened, quantifying it, what were the damages which were suffered, what are the claims the company can make. It is a lengthy process, and this all is done primarily with an objective of litigation, because in future there may be a court case, there may be a police case where you will have to deal with the situation. So that's why these 3 or 4 elements, cyber is added if it is cyber issue. Otherwise, typically it is incident response, codification loss, and if there is email, then e-discovery. E-discovery is nothing but a term given in global reference when it comes to discovery procedures. What is discovery procedures? For example, there are allegations against a company, and the court can say, okay, produce all your electronic records. It is called discovery. So basically, during the litigation process, a discovery order is issued by the judge saying that show me all your emails for last 6 months. So then the company has to provide everything. Show me all your financial transactions. The company has to provide all those things. So that is called as e-discovery. Let's now look at the illustrative key areas of fraud risks. So what is in procurement? These are all areas which we have seen in our regular life. Procurement, awarding of contracts to favored bidders, very common thing and common theme which we have seen in FI. Then specifications are tailored or modified to favor a bidder or restrict the bidder. This is also a smart way. Like you will see that tender specification is made in such a way that only 2 or 3 people will qualify, or they'll restrict certain other people. So this is the way people in procurement do fraud to favor one particular set of vendors. Then using ghost vendors to manipulate bidding and siphon funds. Ghost vendors are nothing but fake vendors or sham companies who don't exist in real, but they are just created on paper, as I said earlier. Then there is no diligence which is done. Okay, then there are unauthorized changes to POs which have been issued already. Then there may be issues of supplying of inferior quality and short quantity. For example, you have purchased, typically happens in say coal. Coal has something called as GCVs, which is calorific values, which is the richness of coal to burn and generate fuel. So the coal varies from 1500 GCV to 3000 GCVs. 3000 is the most expensive coal, 1500 quality is the least expensive coal. So when you purchase by paying money of 2600 GCV, but when you actually receive the coal, it is 2000 GCV. So even though it is appearing less in terms of numbers, the amount of impact per metric ton is in the range of 1000 rupees. Understand? Per quintal, 1000 rupees. So that is the way people cheat. These are real cases what we have seen in our life. Then GRNs are recorded in excess of quantity received. Then ad hoc discounts are given. Duplicate payments are made. So these things do happen in procurement. Then in case of dispatch, when you are in a manufacturing company, there is concept of production and dispatch. You see a lot of issues around how the weighbridge is done, how the material movement is calculated, how the dispatch records are manipulated, how the stoppages and routes are diversions. In fact, a lot of manufacturing companies, this is very common. How a truck gets loaded from a factory, weighed on a weighbridge, moves outside the gate, goes to 500 kilometers, reaches destination. There are at least 15 events in this. If you don't monitor these 15 events, there will be crores and crores of losses. Then survey report, very important element. So when I said about coal, there has to be 3-4 people, there has to be 3-4 different sets of people who can do that thing. So there is something called a surveyor in our industry. What the surveyor does is verifies the quality and certifies, okay, this is the quality we see. Surveyors are one of the most abused entities. We have seen in most of our investigation, the employees who work with surveyors, they are bribed and they help in manipulating the quality reports. And that's how the entire procurement and dispatch fraud happens. When it comes to sales and distribution, there are no approvals and documentation for pricing. Pricing is the most important thing. Differential pricing and discounts is a way used by the people to benefit certain customers. Discounts are which are not approved given to customers. Then transit losses are not recovered. Then lack of appropriate vendor selection process. So there are multiple things which happen even in sales. What we see typically is that Idea is to benefit. So what companies do is either the employees will benefit the customers, or the promoters will create front companies to divert the sales. Payroll, another problem area, because big amount of money is spent on it. Then candidates with fictitious credentials are hired. There is a proper racket of it. Like we did recently a case for a large IT company, that too in US. To our surprise, we found that more than 500 people were hired who didn't have basic graduation skills. They were just hired because there was a proper scam running, and the amount of salaries that were given to these people were phenomenal. I mean, it was like, surprise to our eyes that how can a large IT company, a reputed IT company, can hire 500 people in United States with not even graduation. Imagine the kind of scam that was running over there. And again, it was connected to second one, incompetent recruitment agencies. So there was a cartel between the recruitment head, the recruitment agency, and the employees. They all connived together, defrauded the company, hired 500 people, and they were put on a job which was some random job. Modifications to HR and payroll database. Candidates who are directly coming to company, they are referred as referred employees to get the commission. Then manipulation in contract labor, very normal and regular fraud scheme used by companies. Then facilities where you see manipulation in cost of estimates, collusion with vendors, theft, contractual variations, several issues which typically happen in a facility is there. Employee reimbursement, again, even though the money is small, but it can actually impact the reputation of employees. We have seen a lot of employees who are getting terminated for falsifying simple things like HRA records, transportation bills, hotel bills, refurbishment bills. Even though the amount of money is not significant, like 500 rupees or 5,000 rupees, but the integrity is essential here. And the companies in today's situation do not want to compromise on integrity. Even if there is a 500 rupee fraud by an employee, the employee is terminated. Moving to technology technology for governance. So why we are talking about technology now? The reason is because we have moved significantly towards usage of technology. The data, what we used to have 10 years back and what we have today, we use fancy words like big data, but that is a real thing. So that's why it has become very crucial for us to use technology. Why? Because the data size is increasing and the automated solutions for governance are available much and much more. How do they help us? They help us in managing in a very comprehensive way, an oversight function over what is happening in the company and how the real world is behaving. Data analytics can actually give you significant, in fact, I know I have done several studies on this. In fact, we can talk on data-driven intelligence for 2 hours. It is insufficient even that amount of time. The way you can use your data to predict fraud behavior is phenomenal. An ability to monitor and implement controls. You can actually have a centralized mechanism where you can monitor controls in a company, how it is behaving in one particular organization, how a particular factory is behaving, how a particular depot is behaving. Then scalable solution to grow, monitor, even go on fraud indicators. Recently, we did something for a very large oil and gas company. We created a dashboard of the fraud indicators, and now the head of ethics can sit in his room and actually see on a large screen 50 fraud indicators. And it's actually an AI-based system where if any fraud behavior comes out, that area is red flag, and that individual can see and identify, okay, this area is my problem area, I have to act upon it. Then framework for utilizing appropriate technology for detection in near real-time basis. This is the key right now. Everyone wants to detect the fraud on a real-time basis, not in like a post-mortem thing, but on a real-time basis. So that's why technology will help you in giving information. But let's be honest, technology will give you the information, but that skill set or that mind to decipher that data is always people like you and me. We have to read the behavior and conclude that this red flag is a red flag or not a red flag. Okay, now I'll take 1 or 2 case studies, and then maybe what we can do is we can have a Q&A session. so that because I've already covered a lot of topics, maybe I'm sure a lot of people will have Q&A and we can get into that. This is again a very recent famous case of a large organization where the MD and the CEO had shared classified information of the organization with unknown people. The advisor to MD, CEO, and the group operating officer was offered exponentially high compensation and perks. Despite all this powers and privilege, the GO was never designated as any key personnel as per the stock exchange regulation rule. This is a recent, basically this is in public domain, the NSE case, where how the CEO and the MD had kind of misused the confidentiality, misused the powers, and shared confidential information with several people. How can we prevent it? How can people like you and me can prevent this? Basically, important is to have segregation of duties. It is an age-old concept of segregation of duties, even used to be there in ancient times. What we see amiss is a lot of companies don't pay focus on segregation of duties. If you really want to have that duty, you should give it, assign it. So that's why segregation between duties, who will do what, there is enough amount of play for both the employees. Then periodic review of whistleblower complaints. This company never did that. This company never focused on whistleblower complaints. They were in their whole world to do business and they didn't focus on this. So that's important. Then periodic review of remuneration by a nomination committee and remuneration committee. People should understand that why an individual is getting so much amount of money, what is the role. So that kind of review should happen. This is the infamous case of Satyam, again in public domain. I'm sure most of you would know how it was done. Just to recollect everyone's memory, what was the point? The point here was simple. The promoter created fake revenue. What the promoter did? The promoter created fake revenue, fake invoices, billed it to fake companies, created fake bank statement, bank balance, everything was fake. So all the debit and credit was fake. Just inflated the value of balance sheet from say 100 to 300. What happened? The share price got increased. What happened? Because the share price, the promoters sold certain shares and invested into real estate. Simple. So artificially inflate the share value, the profit of company, artificially inflate the share price of the company, sell the shares, generate profit, invest into real estate. Appears to be simple, but that's how it is. I had fortunate to see something about this investigation, so it's an interesting case. The way it was done systematically, the way the invoices were created in a systematic, there was a battery of people who themselves didn't knew that they were doing fraud. So there were employees who were doing fraud, but they didn't knew that they were doing fraud because they were living in a world where they thought that this is a real transactions, these are genuine transactions. But then they will realize that they are part of a crime because the way things were presented to them were in such a manner that it appeared all true. Because they were employees, they were real employees who were working on a project, even though the project was not there. But the employees were told that yes, there is a project, you have to develop a software. But the software was never meant to be sold to anyone. So that way, the entire fakery was created here. That way, the entire inflation of the revenue was done. The balance sheets was inflated, and that's how the profit was generated. Obviously, it led to a debacle of a very large reputed IT company. At that point of reputed IT company, no more reputed IT company. It led to careers of thousands of employees in the IT sector. It also created a question mark on people like us who were the auditors at that point of time. Obviously, the law took its own case, own course, and took appropriate measures. In fact, in our world, when we talk about this case, this is one of the foundation of creating a strong corporate governance, creating a strong Companies Act, creating a strong mechanism to prevent fraud. Because after this, even in the forensic world, like I've been doing investigations for 18 years. After 2008, our practice, our area of specialty has seen significant change. Even though it is bad for the country, but the number of cases which we started to get after this case has increased manyfold because people started to talk about fraud, people started to talk about these kind of issues, and that's how when we see today, we see this as a turning point in our profession. So So that's how the Satyam case has impacted all of us. I would take a pause here. I am assuming we have 15 more minutes. Back to you, ma'am, there. And happy to answer questions if anyone have them.
Yeah, we are taking some questions, sir.
Right.
Please elaborate on software available to help mining the data in finding trail of money.
Okay. So there are, when we say trail of money, it is, we are talking about banks. So what happens is, in today's situation, there are multiple tools available. For example, I have known ideas, I have known SQL based queries, I have known something like done by Karza Technologies, recently started a company which was acquired by someone. So there are 5-6 softwares which are available, which do analysis of data. For example, we also have developed something called as fraud intelligence platform. So there are tools which are automated softwares, multiple available. You can buy it and implement and customize it for your company. What it does, it extract the data from backend, performs the query analysis and presents the output. For example, the age-old one is the ideas one, which we used to use even in my articles days. I remember that. So ideas one, which is still there. Then Tableau is another one. Then SQL is another one which we use for big data analytics. And then SAS has its own analytics, SAS software has its own analytics software. SAP has its own analytics software nowadays. So these are 5-6 big companies who are doing this kind of work.
Okay. Does forensic auditor has right to interrogate suspects like police officer?
So I would not call it interrogation. The forensic auditor has right to interview and ask questions. When it comes to interrogation, it is only with the police officers and quasi-judicial authorities. We have only right to ask questions. And the questions has to be more on factual basis. For example, if you have evidences, then you can ask questions on evidences. Obviously, we cannot get into the shoes of a police officer and behave like an interrogator, because that's a little aggressive way of questioning. So we don't do that. We are always like an interviewer. So that's why when we talk, we say interview, we never say interrogation.
Sir, if you can stop sharing your screen, that would be great, sir.
Okay, sorry.
Yeah. Then can forensic auditor force bank to provide required information? Very specific, particular questions.
Recording stop. Recording in progress.
Sorry, is the screen closed now?
Yeah.
Okay, sorry. The question was, can we ask banks?
Yes, sir.
So there is no stopping you from asking questions to bank. Like in a lot of our several forensic audits, I have written to banks, telling them to send me the bank statements, send me the
Sir, I'm not able to hear you. There is some issue from your... I'm not able to hear you, sir.
Sir, you are not.
You're not audible, sir. No.
Am I audible now?
Yes, sir. You're audible now.
Sorry, there was some technical. So my answer to your question was, in our experience, we have asked banks to provide bank statements, minutes of meeting and similar things. Sometimes banks have cooperated and sometimes banks have not cooperated.
Okay. What are legal rights of forensic auditor?
Legal rights, can you be please more specific with respect to what?
This is the specific question only, sir. This is a general question, I would say.
So let me distribute into multiple things. So legal rights, when it comes to performing duties on ground, one is ensuring that you are being, you have all the rights to ask all the information and questions to the management. So legally, you have all the rights to ask whatever questions and information you believe is required for your forensic audit. No one can stop you from not giving some information. When it comes to legal right towards for example, bankers have appointed you. Your legal right is to provide a complete report to the bankers along with all the evidences, and as far as possible, provide a conclusion on whatever you have seen. That is your legal right. When it comes to today's situation, we see a lot of our reports get in front of CPI and SFIO. So the legal right for us is that we can be called upon by CBI, EOW, or SFIO to understand the report. So obviously you have to go and explain them your report, but at the same time, you are bound by your engagement and you are bound by your work, and you are responsible for only that kind of work what you have done, depending upon the information that is provided to you.
Yeah. How to get qualified as forensic auditor?
There is no specific qualification for
qualification.
Yeah, but it's just an experience.
Yes, sir. Then can periodical mandatory forensic audits, say in once in 2 years, in addition to statutory audit, serve as a prevention rather than a cure, especially in NBFC?
Oh, it will phenomenally change the way we look at it. I mean, if that is done, obviously I'll be selfish because that will increase the business for people like us. But I think forensic audit every 2 years will increase the pressure on the management to behave in a right ethical manner, and it will definitely reduce the possibility of fraud.
Then we have, please explain the difference between forensic accounting and forensic auditing.
Okay, forensic accounting and auditing is more about broad or breadth of coverage. Auditing is about the entire entity, which includes the overall utilization of funds, accounting, expenses, management, and everything. Whereas when it comes to forensic accounting, it is not very broad as audit. It is more focused towards how an accounting of transaction or a particular situation has been done. I'm sorry, I cannot hear you. Can you repeat?
Is there any difference in role they can perform to strengthen corporate governance?
I believe the roles are similar. It will not differ much.
Okay. Then AML training can also be part of the framework. These are only suggestions.
Yeah.
Many of the members have asked. Yeah, many of the members have asked whether the Python and SQL really important for CA when they are performing forensic audit. If yes, what are the sources?
It is not essential. That is only, I mean, see, even I don't know Python and SQL. There are people who are experts in that area. I deploy those people and they do the work. So I, as a chartered accountant, has never learned Python. But if you want to do, it's an added skill. It will benefit you, obviously, but it is not essential.
Then can you share the frauds committed in India as well as globally, which were detected through forensic audits? So why forensic audit?
Yeah, I mean, you pick up any NPA case in today's situation, be it ABG Shipyard, be it GC, I think the ILFS case, or be it the DHFL case, these all have been detected by way of forensic audits.
Like some of the questions, what are the avenues of practice available for FAFD qualified individual practitioners, both present and upcoming? These are general questions because these forensic audit sessions are very lesser we have organized.
So I'll tell you with respect to avenues for members, I'll give you a simple example. When I started my experience in forensic in 2004-5, that point of time in India, according to my knowledge, the forensic professionals were not more than 300 or 400. Today, we have at least 5,000 professionals who are into this field. So that's the kind of growth we have seen.
Okay. So with this, we have completed the questions. You took the case studies also. Now Shri Priya ma'am is also there. So
Yes, ma'am.
I'll hand over to her.
Thank you so much, Ajay, and thank you so much to the audience for this listening. I believe the sessions were very good. We had a small response to submit. And very interestingly, speaking of forensic audits, there has been the report of the Corporate Laws Committee, which has just come a couple of days back, which is one of the recommendations of this committee is to embed the term forensic audit in investigations under Section 213. So it appears that there's going to be a very statutory recognition for a forensic audit as well. So thank you once again very much, Ajay, and hope the listeners enjoyed this session. We look forward to having you more. And I was there for a part of your session, and I think your knowledge on the subject was terrific. So thank you once
for the
again.
opportunity, ma'am. Thank you for the opportunity.
Yes, thanks. And I'm given to understand about 2,000 people,
2,000 plus.
2,000 plus attended this webinar here today. So,
Great.
Sir,
That's
to
good
case
to know.
studies also, if you can share your presentation, we can share.
I will share it with you.
Income
You can
participants.
share it. I will share
Yeah,
it.
thank you so much, sir.
thanks.
Thank
Thanks,
you.
Ajay.
Thank you so much, sir.
Bye.
Yeah, bye, sir.
Bye, everyone. Thank you so much.